Good evening, ladies and gentlemen. What is going on? So, if you attended the live, mad love and respect to you. So here is this video that I promised you earlier on today. Tried to get it done earlier on, but certain things are happening, so I couldn't get it done. But here it is right now. Frankly, Bitcoin is going to be flatlining prior to this core price index. That's why it hasn't really done much today. And it probably won't do much until later on in the UK session where they are going to initiate a setup. This strategy is going to encompass the 5-minute time frame, ADRs, the VWAP, and the importance of the Asian session. Ideally, this strategy should be taken into consideration when there are no news plays. Okay? But when you do actually start to get a feel for how to utilize this, naturally, when you've been trading it without the problem of news coming up, you'll be able to establish a difference in whether the play is going to work in your favor or not. See, when I say to you, the Asian session needs to be within a certain range. If it's not within that range, don't expect the chart to really give you any good situations. Granted, scalpers, different story. But from a day trader's perspective, when he gets up in the morning and he looks at the market from the night before and he sees Asia's made a move to the upside and then he sees it come back down again, he's going to be a little bit reluctant because it's like the beef of the move has already happened. And that's exactly what leads me into this first point, the importance of the Asian session. Look at this. I'm always saying it to you, especially in Forex. If the Asian session goes beyond a range of 25 to 50 pips, it's a manipulative move. So you want to stay away from the asset that shows that. You can see bright as day that Bitcoin has done more than 25 to 50 pips. It actually did a pretty bold move to the upside to come down. Look at how wide Asia's session was. Okay? So I would then go on the assumption that I'm not interested in trading Bitcoin because a manipulative move has happened, and I would be of the understanding that they are going to do exactly the same thing again in the UK and the US session. Just look what Bitcoin did. Didn't do anything. Have any of you noticed that we've been stuck inside the psychological ranges all week? Look at this. Euro, stuck inside the psychological ranges. Yeah? Pound, stuck inside the psychological ranges. Everything seems to be inside the zone. Why? What is the significance of them doing this? Which leads me on to the idea. Here we go. So, the first thing that you want to be doing, guys, let me get rid of my face. What have you done, bro? There we go. The first thing that you want to be considering, what's the Asian session? Have they done a manipulative move? Just look at this. Look at how Asia moves down, then comes back up. UK moves it down. US follows through. It's a nice trading session, that was. You've had this behavior by Bitcoin, and then nothing happens. Core price index. So, first thing, when you come to the chart, and this is on the 5-minute time frame, you'll notice that I don't have no 50 EMA. Well, I tried to get rid of the 50 EMA on here, but I got rid of... I don't understand why. I'm trying to get rid of my EMAs, okay? Here we go. 5, 13, 50, done. Cool. I should get rid of that. And I should have my clouds. Get rid of the upper cloud on the 50, lower cloud on the 50, done. That should get rid of everything for us. There we go. It hasn't done it. I don't understand why. Anyways, ignore the 50 and the 5 and 13 EMA when you're trading this strategy. You are only caring about the 200 and the 800 EMA. Okay? First criteria is, where is price in relation to the the 200 and the 800 EMA? Where is it? Okay? That's the first thing you establish. Then, look at the Asian session. All right? What are you looking for in the Asian session? If price is within the midpoint of Asia, then you're going to have to be cautious. You are ideally looking for price to be trading around the high or the low of the Asian session. Okay? And the reason for that is this. If they're moving price high and they then stall at this point, we would go on the assumption that this could be the absolute high. When the UK session comes into play, we would then say to ourselves, hold on a second, where are my moving averages? You can see that price is close to the 200 and the 800 EMA. Now, if I do this following thing here and get rid of that, where are my moving averages? Well, look, price hasn't tested the daily open since Asia. It's trading towards the top side of its actual range. It formed the high, finds resistance at yesterday's high, and then the psychological high right there. I've also got this zone right here. I've also got this zone right here as well. So I'm sensing that this could be a point where they like to sell from. At this point, ignore the 50. The only next logical place for price to go if it starts to break down from here would be the 200 EMA in the chart. Now, you know that's going to be the case because we've already seen what happens. But take what I'm saying. Look at the logic of where you are trading towards. If you can see that the 5-minute time frame seems to be building lot shorts and they're pushing price up but not actually going higher, okay? Then something sinister is happening. Where is price? It's above the key 23,000 zone right there. Okay? All you're seeing is vector pushes up and it's not going anywhere. Look at how concentrated this move is. It goes up, makes the high, but it doesn't go anywhere. So you've got a cluster of orders inside of this zone, making people believe that it's going to go high, but it always pulls back. You haven't seen a test of the daily open, and you know UK is opening up very soon. So hypothetically, you would then say to yourself, hold on a second, what if I decide to run a short from here? You've got stopping volume candle appearing at the highest point. What's the volume? Well, we've got a gap in the vectors. And then we've got a stopping volume candle right here, suggesting that they move price down to quickly grab the orders to move it up, giving me the idea that price is going to come back and recover this vector point. So that's my margin where I say to myself, okay, I'm going to try and see if I can trade in towards this zone. I'm going to take an entry point from here. I'm going to set my stop to be above the Asian session high and go to a particular point in the chart that would be so obvious that you would need to get out of the trade for you to say, right, I'm wrong. So we're going beyond the structure. So that'll take us above the psychological high right there. Why? Because you've already sensed that they can't get above that point just yet. And if they can't do it from here, then they're not going to do it from this point yet. Okay? Remember, this is the logic of building price. You are trading towards the moving average. You haven't had a test of the daily open. Okay? And you can see that you've got a blue vector candle happening down here in this zone. So the logic would say that you're going to come into this vector and then go into this vector as well. There's your logic. You set your risk parameters and then you take the trade. Now, naturally, of course, price ended up breaking down. And here is where the ADR comes into play. Okay? You take the daily open, look at the ADR and say to yourself, well, what is Bitcoin's ADR? All right? Let's assume that it's around 100,000 pips. So we go up. Well, it's a bit more than that. But let's just go up and assume that that's the case, okay? Could be around 95. Let's just say that was Bitcoin's ADR move. You know what? Let's just do it now. Quickly pull up the ADR, just so that we've got the right figure so that you guys can understand exactly where I'm coming from with this. So ADR table showing pips. All right, cool. So that should come up in a second. Here we go. So 94, there you go. Look at that. Bloody hell, that was close. 94,958. That's Bitcoin's range from this. So top side, you say to yourself, okay, that's how far Bitcoin can go to the upside. And this is how far Bitcoin can go to the downside. So you mark off your ADR ranges and then there you are. So you've considered to go short in this area here. Cool. You know how far Bitcoin can go up. You know how far Bitcoin can go down. You've got the Asian session high right here. Now, if the Asian session high is breached, the Asian session high and the Asian session low will act as traps. This is the bread and butter trade. So this is what you're looking for inside the Asian sessions. If price is trading towards the upside of the Asian session, sometimes you will see it try and spike above that zone to come back down again. Likewise, when you're trading inside the low band of the Asian session, you are looking for price to spike away from that point to come back into it if the flavor is to trap traders to the downside to reverse it and move back up, okay? Now, if we go back in the charts a split second, you'll see where they've tried to do that, okay? Look at this. Asian session. didn't take the high. But what they did do was from this zone, they kept within the high. They came down, they came up, they came away, held the range, and then shifted out to the upside to only bring it back down into that zone. Okay. Now, this is something that I suggest you guys do. Always mark off the Asian session highs, okay, to go into the New York session, because just look at the strength of that area. Notice they moved up above it, came down, tested it, bounced away from it, come down below it, found support inside this zone, tapped the psychological zone, but at the same time comes in line with the actual midpoint of the Asian session. And then they come back above, held support, shifted to the upside, come back down again, held that zone, and then just continued to complete the price narrative from this point, okay? If we actually just press play on this and look what happens. Look what goes on in this area. You see it? That area there, how many times did price bounce away from that? Look. They bounced from here. They bounced from here. They bounced from here. They also bounced from inside here. And then notice how the red vector candle obliterates that whole range and shifts price even lower. Now that is all because of the significance of this Asian session zone. Notice how the Asian session low right here acted as a support. Look at the confluence of the Asian sessions. Okay? You see it. This is just the Asian session confluences, ladies and gentlemen. All right? Coupled with the idea of price moving towards, look how they keep going to that 800 EMA and away, 800 away, 800 away. When the EMAs of the 5-minute time frame, the 200 and the 800 EMA start to compress, something's going to change. And you can see what happened. It did change. They marked it down. And then, of course, as we go into the chart itself, you see that they end up moving back up again. Hold on. And that. There it is. I mean, look. If you had marked that Asian session low right there, you would have been waiting for price to come into that zone and test the narrative. I mean, look, you would have been able to exploit this. Perfect W formation in the chart on the 5-minute time frame. Look at the moving averages compressed together. Yeah? And then what would you see? First green vector candle that appears above the moving averages, whether it's the 50 or the 200, ideally better off with the 200. And it's even more confluence when it crosses over the 800 EMA. So something like this, because you'd be trading the rise, the retrace, the continuation to the upside. But just look at the power of the Asian session. That's just using the Asian session high and low. Again, the Asian session dictates where they're going to likely end up. They have a great memory, ladies and gentlemen. Do not dismiss the Asian high and the Asian low. Make sure you mark them off. And wherever the Asian sessions start to join together, okay, that's when you have yourself a number of confluences coming into play. Okay? Now, the next aspect for it is the VWAP. Look at this. Where's the VWAP in all of this madness? Notice how the VWAP right here bounces off the Asian session high, bounces away from it. Cool. Goes across, comes down, moves away from the VWAP, comes back up into it, back into test it, test the zone, and so far so good. Bitcoin seems to be holding inside of this zone. So what do we have here? We've got the Asian session high and the Asian session low right now. So what do we do? Well, let's not look at Bitcoin for a second. Let's put what we've put together and go over to an easier asset. Let's go to Pound. Now, I took a decent trade today on Pound. I did it on this C trader. Where is it? Where did I take my trade? I'll have to get that for you. I took a long on pound from this move here just to go back into the test of the 1.240 in the daily open, and it came into fruition for me. Nice little play on a C Trader account, and I'm just on that account because it's just a nice little platform. I'll show it to you later on, but I want to keep in the focus on this. But look at this. Let's look at the Asian sessions, okay? Asian session. Asian session. Right there. Okay. What do we have? We have this Asian session right here. So start your day off and draw off a line, okay? You've got the Asian session high. Price moves away from that point. Remember when I said to you about that they like to manipulate the chart and move out towards the Asian session at the open or the close? What they did here. Asian session, stop hunt rise, then they ripped it to the downside. Bread and butter, okay? Now look at this. When you mark off the high, and then you mark off the low for the Asian session, okay? Let me get rid of the VWAP for a second. You have a structure in the chart. Now, it helps if you have a few Asian sessions behind you. So it's great to start it off on a Sunday, or let's just go with price right now because we're going in towards the end of the week. So they kind of set everything up for us at the start of the week going into the end. So I'm expecting them to either just consolidate, get the price, core price index out, and then they just manipulate price and then just whip and whack it. So it's nothing that we are really should be looking forward to, but more importantly, China was on a bank holiday as of tonight, so it's going to be pretty quiet for us. But take this logic and do the following. Asian session high, Asian session low. Go back in the charts and find any Asian session high and low and look at how price responds to it over a number of Asian sessions. So here's the absolute high, here's the absolute low of this session. I'm ignoring this one. They come away from that session. Cool. Now I've got myself a new Asian session high, Asian session low. Draw the lines out because they will act as support and resistance. Okay? Funnily enough, this Asian session high acted as a support. Touches the confluence of the 800 and the 200 EMA, but you would have been in this trade before the crossover happened. If you went in on the crossover, the 200 EMA, you would have been getting in at this point. You probably would have sat for a drawdown and end up giving it away. But had you went in on the idea of the bounce from the Asian session high, then you would have said to yourself, hold on a second, man. It looks like I'm actually going to see something from here. You see, the Sydney session opened from that point right there. Okay? So if I get a line like this, that's when the Sydney session opened, roughly. Look at that, test of the daily open. So look at these two confluences. 800 EMA test, daily open test, Asian session high test. Where's the ADR? You're expecting pound to do an ADR move to the upside of roughly around 116 pips, say, for example. So you expect that move. So that's where it puts us in terms of ADR, okay? Price is still flatlined inside of that zone. In terms of the ADR to the downside, they've only managed, in principle, we copy this, we take this strategy here and move it down, we would then assume that they've only achieved what? How much of the ADR have they achieved to the downside? Not really much. Yeah? So then by that principle, I would assume that if it can hold inside of this zone and not break this significant low, I would expect it to come back up and test the daily open because they haven't shown me an interest to break down lower. This is what you have to wait for. You're waiting to see if the Asian session low is going to act as a true area of support. So there it is. There's a support. Green vector candle comes into the chart. Happy days. Move towards the 200 EMA test. Retrace. Continuation to the upside. Bang. When you see a big move like that, retraces back in. Look left and look at the Asian session high right there. Cool. Let's move across the chart. What have we got? Oh, silly me. Forgot to mention. Look at the zone that Bitcoin just tested. Sorry, look at the zone that GBP just tested in the New York session. Asian session high. Go across. Bang. So as price is coming down, remember, yeah, you don't have access to this. And when you're looking at this right here, you're saying to yourself, Well, if principle has it, I would expect price. If price is going to break down from here and I decide to run a short from here, I'll go short. I'm trading towards my Asian session high because that is where they significantly moved price from. That's where the interest was. Look what happened with price. Comes all the way down. You could be in a short right now, breaks towards the 800 EMA, and then bang, they come towards that point. Now, you as a trader of the hybrid system will be looking at this saying, hold on, a big red vector candle moved to the downside. That's the trap that Mr. Market Maker initiates, but it's actually coming into the same spot that they moved aggressively away from. What does that mean? It means I can only do one of two things. I can only go long. Why? Because New York reversal comes into play. What was the exact time of the reversal, ladies and gentlemen? The reversal on the 5-minute time frame. There's 3 o'clock. They made the move. New York reversal delivers. You're waiting for the reversal in New York. That's the rule. And they gave us the reversal. 2 hits to the low. Confluence of the actual Asian session high. Shift out to the upside. Happy days. I hope that makes sense to some degree. You're looking for and what was the importance of this? The importance of this was the Asian session high and low. Mark them across, throw them, because the Asian session is the only important time that the market maker can really manipulate the charts. He sets the scope for what's going to happen to the market when the main markets open. It's like this. You get insight into information before a football game. You're going to go tell the right people, yeah? So then those right people were going to start putting their money in places, and then you're sitting back and you're waiting for the end result. That they're thinking, all right, cool. We've got our money on the dogs. We've got our money on the horses or football, whatever it is that anyone bets on, okay? And you sat there and you're thinking to yourself, man, I like the idea of it. How's it going to play out? Oh, well, it's going to be so-and-so's going to win. All right, cool. So you don't care. You've set the playing field. The same with the Asian session itself. They mark up the high and the low, and those points are, all right, to break it down to you, the psychological high and low at the start of the week, which is based on throughout the whole week, is the market maker's spread. The Asian session high and the Asian session low are the mini psychological high and low for each trading session. Now, every time they come back into those points, there's going to be a significant reaction. If you find that there is an Asian session that marries up to another Asian session's high or low, you've got confluence, okay? But focus on the highs and the lows. And it's not going to be a plain sailing strategy where you're always going to see it happening. If you don't see it happening, then come away from the asset, go to another asset that's showing that behavior. Because there is structure to the market maker's madness, ladies and gentlemen. And I've spent enough time looking at these punks to understand their behavior. And this Asian session high and low, coupled with the logic of the ADR, you're looking for an aggressive move to the point where they can achieve the ADR. This is the importance of the Asian session high and low. The high and low of Asia sets the narrative for how likely the ADR is going to be fully completed. Likewise, if they open the stock market, if they open at the Sydney Open and they achieve their ADR for the day, come away from that asset because it's going to look like a very manipulative play. Okay? So play around with that. Use and get start off with the Asian session high and the Asian session low. Throw it across the chart. Let it go as long as you want. But don't use the Asian session high from 3 weeks ago. Keep it in line with the week. Okay? So start with Sunday's Asian session high and low. Throw it across the chart and see where it marries up. Go back in the charts and do it. And then look at where price bounces from. Does it show strength on the Asian session high that is formed on the Sunday? Or does it show more on the Monday? Does it show more on the Tuesday? And you'll start to understand, why does price move from a particular point? There has to be a reason for it because the market has a memory. And if it's an algorithm that's working these numbers, then that algorithm is going to be triggered at a certain point in time when it gets to a specific price point. Any questions on this, chuck them down below, ladies and gentlemen. I'm going to get myself off to bed. I'm absolutely exhausted. I don't know what time it is. Yeah, I'm quite exhausted. So I'm going to get this over to you. Just any questions, let me know. All right? Mad love and respect. Just a bit of a quick one for you as well. Quick one. Just go over to Bitcoin just to give you an insight into what to expect tonight. Okay? Look. We're not going to look at this, are we? No. Why? Because it's based on the 5-minute time frame, and I've got core price index coming out, so I really want to stay away from it. But let's just go on the assumption that could be the case. Let's just do it. Asian session high, Asian session low. Okay? When I look at this, I say to myself, right, where is it closer? I've got one Asian session here, another Asian session, and another Asian session here. Where do the highs and the lows meet up? Well, I'm seeing more of interest right here than I am seeing anything right here. This Asian session low, meets up with this Asian session zone right here. So I've got myself a little bit of confluence, which happens to be the point that it actually bounced away from. That's not by accident, okay? Happens to be, again, the same point it bounces from, not by accident. Not the 800 EMA, because the 800 EMA wasn't there. The 800 EMA was further back because it's laggard. Yeah, it moved forward. So it's not because of the 800 EMA. That's a byproduct, all right? Moves up again, comes down. Again, the Asian session high at that point happens to be the New York session low. Not by coincidence. There's a reason for it, okay? And what day was that? That was Monday. Funnily enough, the first Asian session usually sets the narrative. There it is right there. Seems to be that the key high that is formed at the start of the Asian session on a Monday is where everything seems to move away from, and it stays within that Asian session low. See what I'm saying? So if Bitcoin right now is going to do something, we can see the Asian session highs right here, but it hasn't been fully formed yet because we need to wait until the actual Asian session closes. We've got the midpoint right here, which we need to be mindful of. And now we haven't got the daily open just yet, but we anticipate that Bitcoin, in principle, today should have achieved an ADR move of 105,000, which puts us in towards this zone right here. Okay. What's it done? Nothing. All right. Now, when the new daily open candle comes into play, do exactly this. Mark the ADR to the upside, mark it to the downside. Okay. And look to see where the ADR falls in relation to this zone here and this zone here. So what you're looking for, guys, is an Asian session from the Monday to see if it marries up throughout the week as a point that they bounce up and down from. Is it the VWAP? Is it the 800? Or is it the Asian session high and low that is formed at the start of the week? Practice that, ladies and gentlemen, and I promise you, you will be very surprised when you go back in the chart and you start with the Monday and you'll see how this Asian session thing principle seems to work all the time. Take care of yourselves, gang. Peace.